Welcome to HouseLux Estate, your ultimate hub for all things finance. Today, we delve into the world of banking. It's a vast landscape, filled with terminologies and nuances that can sometimes feel a bit overwhelming. But fear not, because we're here to simplify it for you. Today's agenda? We're shining the spotlight on the two big players in the banking arena, commercial and retail banking. These two types of banking form the backbone of our financial system, and understanding their differences is crucial for anyone looking to navigate the financial world with ease. Whether you're an aspiring banker, a business owner, or simply a curious mind, this video is for you. So buckle up, as we're about to embark on a journey to demystify these financial giants. And don't forget, if you find our content helpful, do consider subscribing to our channel. Let's get started with unraveling the world of banking. To begin with, let's first understand what commercial banking is all about. Commercial banks are like the heavy lifters of the financial world. They're the institutions that help keep the wheels of commerce turning smoothly. But what exactly do they do? Well, their primary function is to accept deposits. Think of it this way. When you deposit your money into a commercial bank, you're essentially lending it to the bank. The bank then uses your money, along with the deposits from other customers, to fund its various financial activities. But accepting deposits is just one part of the equation. Commercial banks are also in the business of lending money. This usually takes the form of loans, which can be for a variety of purposes. These might include business loans for companies looking to expand, or mortgages for individuals looking to buy a home. The interest that the bank charges on these loans is one of its main sources of revenue. Another key function of commercial banks is the provision of credit. This is essentially a way for customers to borrow money from the bank to make purchases, with the understanding that they'll repay the amount borrowed plus interest at a later date. Credit can take many forms, from credit cards to lines of credit for businesses. So, to sum up, commercial banks serve three main functions. They accept deposits, lend money in the form of loans, and provide credit. They play a vital role in the economy by facilitating the flow of money from those who have it to those who need it. But it's not just about the money. Commercial banks also provide a range of other services to their customers. These can include everything from foreign exchange services to investment advice. Essentially, they're a one-stop shop for all your financial needs. So that's commercial banking in a nutshell. But how does it compare to retail banking? Now that we've covered commercial banking, let's turn our attention to retail banking. Retail banking, also known as consumer banking, is the face of banking most of us interact with every day. It's the local branch you visit for your personal banking needs, whether it's withdrawing cash, depositing checks, or setting up a savings account. At its core, retail banking is about providing banking services to individuals rather than businesses. It's the side of banking that focuses on consumer-oriented services, such as personal loans, checking and savings accounts, credit cards, and mortgages. Let's delve a little deeper into these services. Firstly, we have consumer loans. These include personal loans, auto loans, and student loans. These are typically unsecured loans, meaning they're not backed by an asset like a house or car, but rather by your promise to repay. Next, we have personal accounts. These are the checking and savings accounts that you use for your day-to-day financial needs. A checking account allows you to deposit and withdraw money as needed, while a savings account is designed for longer-term storage of money, often offering interest on the balance. Then, there are mortgages. A mortgage is a loan from a bank or other financial institution that helps you purchase a home. The home itself serves as collateral for the loan, meaning if you can't make your payments, the bank may take possession of your home. Lastly, retail banks also often provide credit cards. These cards allow you to borrow money up to a certain limit to purchase goods or services. The bank then charges interest on the amount you've borrowed if it's not paid back in full each month. So, when you think of retail banking, think of it as your personal financial hub. It's the place where you manage your money, borrow for big purchases, and plan for your financial future. Now that we've outlined both commercial and retail banking, let's dive into their differences. Though both commercial and retail banking fall under the same umbrella, they differ in several key ways. Think of it as two distinct flavors of ice cream, both delectable, but offering unique tastes and experiences. Let's start with the target audience. Commercial banking is primarily designed for businesses and corporations. These institutions offer services tailored to the needs of these entities, which can range from small businesses to multinational corporations. On the other hand, retail banking is more consumer-focused. It's the bank down the street where you deposit your paycheck, or where you go to get a personal loan for that car you've been eyeing. Next, let's talk about the services offered. Commercial banks provide a broader range of services, including business loans, treasury and cash management services, and even commercial real estate services. In contrast, retail banks offer personal loans, mortgages, and savings accounts, along with other consumer-oriented products. Risk factors involved are also a key distinction. Commercial banking, by its very nature, entails a higher degree of risk. This is because commercial loans are usually larger and have longer terms than personal loans, which increases the risk of default. Retail banking, while not without its risks, is generally considered less risky. This is primarily due to the smaller size and shorter term of retail loans, as well as the fact that they're often secured by collateral, such as a house or a car. The regulatory environment for these two types of banking is also different. Commercial banks typically face stricter regulations due to the larger sums of money involved and the potential for systemic risk if a large commercial bank were to fail. Retail banks, while also heavily regulated, face a different set of regulations focused more on consumer protection. Lastly, the relationship with customers varies greatly between the two. In commercial banking, the relationship is often more transactional, with a focus on the financial needs of the business. In retail banking, there's a greater emphasis on building long-term relationships with individual customers, offering personalized services, and meeting their specific financial needs. In essence, commercial banking is like a well-oiled machine, designed to support the vast and complex financial needs of businesses. Retail banking, meanwhile, is more like a trusted friend, ready to help you navigate your personal financial journey. So, while commercial and retail banks may share a common goal of serving their customers' financial needs, the way they go about achieving this goal is quite different. It's like the difference between a symphony orchestra and a jazz band. Both make music, but they do so in very different ways, each with its own unique style, rhythm, and audience. With these differences, you can see how commercial and retail banking cater to different needs in the financial landscape. All right, let's recap what we've learned today. We've taken a deep dive into the world of banking, specifically focusing on commercial and retail banking. Both of these sectors play crucial roles in our economy, yet they serve different purposes and cater to different clientele. Commercial banking, as we've discussed, is all about providing services to corporations and large businesses. They deal with big numbers, offering services like issuing loans, credit, and handling large transactions. It's a sector that's built on relationships and long-term partnerships, with a keen eye on the business world and its ever-changing dynamics. On the other hand, retail banking is the sector that probably feels most familiar to the majority of us. It's the local branch you visit to deposit your paycheck, the ATM where you withdraw cash, or the online portal where you pay your bills or transfer money to friends. Retail banks focus on the individual or the small business, providing services that are essential for managing personal finances and small-scale transactions. The differences between these two kinds of banking might seem stark, but they're both integral parts of a functioning financial system. Commercial banks fuel the economy by supporting businesses, while retail banks ensure individuals and small businesses can manage their finances effectively. It's important to remember that while they may seem separate, commercial and retail banks often operate under the same roof as part of larger banking institutions. They complement each other, each serving their specific purpose while contributing to the overall financial health of the nation. And there you have it, a comparison of commercial and retail banking. This knowledge should give you a deeper understanding of how the banking system works and the different roles banks play in our economy. It's a complex world, but with a bit of insight, it becomes easier to navigate. Don't forget to subscribe to House Lux Estate for more insightful videos on finance. Thanks for watching.